Hi, Karen Deis here, publisher of Mortgage Currency magazine, and this is the August 2012 Mortgage Rule and Regulation video update. Hey, the high priorities this month are Fannie's 9.0 DU upgrade that's going to happen in October, Freddie's HARP LP update that's going to happen in September, USDA increasing fees and eliminating some cities and communities October 1st, and VA updating who is eligible for a VA loan effective now. And just a reminder in this issue that you're going to find several charts and checklists, and Facebook posts, and let me tell you a little bit about the tweets. The tweets are automatic, so all you have to do is log in, push the button, and your tweet is automatically posted to your Twitter account to keep your real estate agents and your clients updated on the mortgage rules. You're going to also find some mortgage talking point articles in this issue that you can use for your emailing to real estate agents or in sales meetings. So let's start with the high priority updates, and the biggie that'll affect you even right now is the Fannie DU 9.0 upgrade that's going to happen October 20th. Now here's the dealio. These changes are in effect, all of them, right now, but they're used for manual underwriting. However, Fannie strongly in several of their memos, and I mean they've mentioned it a lot of times, that these new updates can also be used for DU underwriting findings, especially if it's more favorable than what's there now. All they ask is that the underwriter make a note on the 1008 that they used the new guidelines. Now, some of the changes that make sense, finally, they have come to their senses, including not having to get a 3-year continuance letter for Social Security, long-term disability, interest and dividend, and retirement income. That's a goner. It's not required anymore. And you know, in this economy, people are working 2 and 3 jobs. So Fannie has loosened up how they treat other sources of income, such as seasonal, part-time, commission, tip income, retirement, foster care, capital gains, just to name a few. And one of the huge changes are their interpretation of temporary income. If the employer says that they're on temporary leave income. If the employer says that they're on temporary leave, they are considered employed. However, there's a couple ways to count the income, and you'll read that in the article. Another change is that DU will tell you when tax returns will be required. If it's not on the findings, don't ask for them. Fannie specifically says that. Also increasing are the loan-to-value limit to 85% on 2 to 4 family owner-occupied homes. On the other side of the coin, they're tightening up on a couple things. Child support verification and auto allowance being received. A lot of these updates incorporate several of Fannie's announcements, but the biggie that it's incorporated is 2012-4. So if you have a loan with one of these scenarios that we wrote about, you'll probably need to include that in the underwriting package or bring it to the underwriter's attention, especially if it's more liberal. So, if you've been having trouble getting Freddie HARP loans approved, and I have heard horror stories about it, Freddie says that in mid-September they're updating LP to be more in line with Fannie's underwriting. So what I suggest you do is see if you can resurrect those Freddie loans that got denied, 1 or 2 times, get them updated, and be ready to submit them when the LP is updated for Freddie HARP loans. Here's a couple of VA updates. Now, third-party verification companies no longer have to be approved by VA, and if you use these companies, VA says you don't need a paycheck stub. And one of the biggies is on the VA VOE. You no longer have to have an original. An email or a fax copy are acceptable, and it's about time they change that. There's also a bill outstanding on the President's desk, H.R. 1627, that you should let your real estate agents know about. It's about who qualifies for a VA loan, including now dependent children of single parents who are on active duty who can't occupy a home right now. So let's say that a single parent has left their children with relatives to serve our country, and the service member's child actually kind of inherits the eligibility. Previously, only a spouse was available for that, and we're saying, okay, what about single parents? How are they covered? So VA is trying to resolve that. In addition, surviving spouse eligibility has been extended to a 10-year time period past the death of a veteran, POW, or an active service member. So stay tuned for this one. Share it with your real estate agents. When the bill is signed, we'll get you more information. And finally, USDA is going to be increasing their annual and upfront fees for refinances. There's going to be a 10 basis points annual fee increase for purchases, but the upfront guarantee for purchases will remain the same. The big news is that Rural Housing has published a preliminary report on the city and communities that they plan to eliminate as of October 1st. Now, this has happened in the past, and it's very, very rare that they add a city back in once it appears on this list. So review your pipeline for opportunities to close more USDA loans, especially refinances before the fees go up. And if you are in one of the communities, hey, get those buyers and real estate agents off the fence right now. One biggie change, USDA is requiring that with every single file, you file Form AD 3030, stating that neither the company or the loan officer originating the loan has been convicted of a felony or is delinquent on income taxes. Yep, it is for every single file. Now, the low priority updates this month include the latest FHFA refinance activity report. You might want to read this just to see what's happening in your state. The other kind of low priority is that NMLS has updated their consumer access portal to allow states to download your information into the national database. Previously, it was separated. The red flag here is that I recommend that you go into the database and make sure that the state's information matches the NMLS, because this is accessible to consumers. And also take a few minutes to read the article about the Consumer Finance Protection Bureau and how they're going to monitor credit reporting agencies, including the complaint process and how it's going to affect you and your borrowers. So thanks for viewing, and remember, getting a loan approved these days is rocket science.